All right, everybody. Thanks for watching the video today. This is the quarter two, um, I guess, mega cap earnings day, plus also the Fed day. The Federal Reserve held rates flat today. That's expected, but we also had some pretty big earnings reports today. So let's go ahead and dive right in. I was going to focus on really like the four companies here that reported the earnings, and then after that, I'll just show some quick bull bear setups for the indexes. All right, so for now here, should be seeing my chart here. All right, so at first, let's go through Microsoft. So Microsoft, overall, well, I had some notes here. I'll pull it up. Overall, here we go. Overall, they had a strong beat, but the the AI is still carrying the the narrative here. They had some cloud, lots of good cloud growth. That's kind of the main theme here. Like Amazon had AWS was seemingly reaccelerating here, but there's still a lot of heavy capex for for a lot of AI spend. So Microsoft in general here, I think, is probably going to do one of these like head and shoulder things. It's probably a little early for this. If anything, you might see maybe like a small pullback kind of thing, and then head back up like this. Let me change colors here so it's a little easier to see. But that's kind of what I think is going to happen here with Microsoft. So we'll probably have just a bit of a small pullback. They already got pretty much hammered here, and this is kind of a nice looking corrective count. So I do expect some sort of retracement here overall. I'd say maybe like 457 to 470 is probably a reasonable couple levels. All right, now let's take a look at Google. So Google, they smashed everything again. So Google itself, it actually kind of running into some resistance here, which is a bit strange. Even though it made a new high today here conveniently right before earnings. Usually the first move isn't really the best move, or isn't really like the real move. So what I mean by that is, you might see some sort of pullback, and it's possible, you could see something like this where you have like a bit of a wave forward, maybe it might not be the right count, but you might see something similar to this, or you might see it reach up just a bit more and take a little bit more of a symmetrical type of form here. If I change the time frame here, oh yeah, there we go. Okay, so it's either a very long wave three, or we just saw the wave three into wave four, and then you might see some more consolidation and potentially the last little run up here. But this is still something that overall for Google, they a lot of cloud growth. Their AI integration and things like that, it's really front and center for these guys. I'd say it's probably the most balanced AI play right now. They've got a lot of different diversification in the market, whereas somebody like Amazon, like they have AWS, but they really need to kind of play catch up. Like they're still an e-commerce company at its heart, but they still need to have a bit more diversification there. And Google has their hands in a lot of different things. So on top of that, they also had the announcement today about Anthropic and wanting to do some investment there, about $40 billion worth, which is a lot. So we'll see what happens. But overall, looks like these guys are still making some good progress here, and they're partnering in the right ways. So Google, I think, is still a pretty good, I'd say, definitely one of the leaders. I like it a lot more than I like Microsoft. And that's just not from like a personal decision. It's more of like I just think that they're better positioned, to move faster as a company versus Microsoft, which is entrenched and they have a lot of legacy products. I'd say the canary in the coal mine here is that Google relies a lot on their search, and same thing with Windows. They rely on software sales. I would say over the last 6 months, I think Office has pretty much been rendered obsolete. So a lot of that subscription revenue I think is going to fade in the future here. So I think just to try to compare it to Microsoft, it's probably why they actually got clobbered here, is that not just earnings in general, but there's just a lot of anxiety out there with just how these companies are going to handle pivots with AI. I mean, you can spend a lot of money on it, but that doesn't necessarily mean short term you're going to get a lot of benefit. So, all these companies are spending an enormous amount of money. They're laying off people to shore up some of that CapEx gap, but overall, it just seems to be, I think it's sort of like a calm before the storm here, where you can see some pretty clear like 5-wave up, or you can see some sort of corrective action. This looks like a pretty clear longer term, sort of bullish structure here. But even if it continues to rip up higher, I still think that you're going to see some stalling out here. This is a pretty clear trend line touch, and you kind of see the same sort of thing with some of the other charts. So let's take a look at Amazon. Amazon, the initial reaction was a sell, but this one I think is a little bit more vague. This one I think. Let's switch it out to the day. So yeah, I think kind of like the other, or kind of like the indexes here, you'll probably see something like 273, maybe like a 5-wave. Let's say tomorrow it opens up a little bit lower. People probably buy the dip there, and then you could probably see like a termination here for like a final wave. From a account standpoint here, this really is I feel like getting a little bit long. So we've got five contact points here. So it's kind of following a very predictable pattern. So I would say if you're long Amazon, you might have a little bit of a pullback and maybe a continuation here, but with oil and everything else kind of getting a lot more expensive here, and no resolution for the Iran conflict. One thing I think we're going to see here is that a lot of these companies are just going to start topping out. It's going to be really hard for these guys to maintain this this level of revenue growth. So other than that, let's see here. Yeah, okay. So the main takeaway was really just they had a beat with AWS reaccelerating, and it was sort of like I guess you could say that like the earnings announcement was more of like a show me AWS isn't losing kind of quarter, because they got pretty beat up last quarter with a lot of their capital expenditures. I mean, not really sure what changed in the last quarter, with the stock ending up a lot higher. But anyway, so you could see a lot of whipsaw here. I can already see after hours it's kind of exceeding that. So maybe we see something sort of like this. It just depends. So it's kind of jury's still out here, but I still think that we're still in this like last kind of stage 5, not stage 5, like 5th wave, end of 3rd, end of 4th. We just haven't really seen it yet. We do see some crazy RSIs elevated everywhere, with this massive pump out of nowhere, and we're still now no better off than we were 2 weeks ago, from like a geopolitical standpoint. All right, so let's take a look at Meta. I think Meta got clobbered the most. Their takeaway there was, I mean, the revenue beat is about 33%, which is a big beat, but their capital, their CapEx raised from 125 billion to 145 billion, which is a lot. Plus, also, they had this leak about their, about the 10% layoffs that are coming up on May 20th. So they're just, doesn't really have a lot of good PR right now. And it's really just the spending, like how are you going to justify all the CapEx spending? So instead of, building up a war chest for tough times kind of thing, they're just, continuing to spend. Okay, so that's kind of the mega caps here. I actually think you could probably see here one last note on Meta. You could probably see some sort of weird whipsaw. I'd say that's a bearish case, but you might actually see something more along the lines, like you could see some sort of recovery here, and it ends up making like a sort of a consolidation pattern long term, which is possible. I think it's probably unlikely, but we'll just have to see. I mean, they you see a lot of selling here, except for just like one day where we had like a big and that was the last the last earnings spike here. So I think it's it's gotten a little bit overextended, and now you're starting to see that resistance at the 200. And all these companies, it's not an accident that all their prices are driven up to highs or just below the highs here before their earnings announcements. Like they're gonna do well with revenue, but I guess the main takeaway is that when you do beat, but then you also expend a bunch of money, it's like you have to keep that cash flow train going here. And I do kind of think that you'll see a little bit more of stalling with AI spending, just because everybody's got plans in place now for everybody's got plans in place for data centers. They've already paid the down payments, or whatever they got to do, issued the shares or corporate paper or whatever. But I still think you've got some headwinds coming for AI spend here, just because if companies, well, specifically if the VPs and C-level execs of these companies are paid mostly in stock, they don't want the stock to go down 10%, like happened to Microsoft last quarter. So they might make different business decisions based on their compensation, which is not unheard of. Now it's speculative, I guess, but it's just one of those things I kind of think is a little underreported, where you have a lot of these gigantic companies where they know they're spending a lot of money and they're not getting a lot of return from it. But I guess it's not really up to them. It's kind of the speculators playing in the market right now. All right, so that's those are all the earnings. Now let's take a switch to let's take a look here at the Nasdaq. All right, so let me pull up. This is the webinar view. All right, so one thing we talked about last week was about how this could potentially be some sort of regular flat sort of pattern here, and I guess like I'll start with the bearish, but I will touch on the bullish. So I think like longer term, this is going to be really hard to sustain. I think that if you go to something like the daily level, you can see that it's still pretty superheated, but you can also see that we're starting to get some higher volume sell days. So in my opinion, this is a lot of the bigger players like trying to get out or take profits before you have the volatility with earnings, and also too, like I mentioned before, usually the first reaction is not like the real reaction. A lot of this is sometimes trap buyers, and that might take a day or two before you might actually see some sort of reversion. So my I guess what would invalidate this scenario is if we get a sustained punch above this like 27,500 level, and then we have a different story. So I think if you're just to kind of chart this on the fly here, let's assume that that does happen here. So this sort of view, you could probably assume that it's going to be some sort of like a wave 3, and then potentially like if it breaks through this level, and then you don't see some sort of strong rejection, you see just kind of like a lazy rejection. I don't really know how to explain it, but you see some sort of like lazy rejection here, then you could probably see like a shorter term kind of wave 4 is like you see more distribution up at these levels. That is, I'd say probably the bifurcation level here is this 27,500, and that would be I would say sort of like an invalidation of that irregular that longer term irregular pattern scenario. And let's see here, as a comparison, I would say with the S&P, I'll just get some of this junk out of here. With the S&P here, I'm also seeing a very similar scenario where this 7180 seems to be like the kind of the break point, or the bifurcation level. If you can kind of see this at the daily level, like you've got this breach of the this breach of this key level, and buyers are trying to see like what the reaction is going to be, because you never know. Sometimes it could be some violent selling. Somebody's algo is programmed to sell like crazy at 7180. You just never know. But I do know here that we've seen this kind of like an exhaustion count on the way up at the weekly level. So that's important to know, because there's you know, I mean, obviously it's just rallied in very, very low volume. You're seeing the volume pick up, but it's more on the sell side, and you don't want to see that if you want to see continuing strength with rally. So typically, you know, what you want to look for is you kind of want to look for something like this with volume, and you want it to all be, you know, blue or green or whatever's on your chart. You know, the last thing you want to see is like a divergence with price and volume. And if you look at this, this is the sector breadth chart. You see that in the last couple of days, ever since we got that that weekly sell signal, we've started to see some, you know, declines here. Pretty much what you're seeing is every sector, the percentage of their the percentage of the stocks that are trading above their 20-day moving average. And as you can see here, you've got a lot of you know, a lot of this, you know, weird variations. So you have like materials that are, you know, 35% of stocks are trading above their 20-day moving average. You know, you've got you know, energy that's gone bananas. And you know, just to kind of reiterate, you know, every time there's a, you know, literal doubling of, you know, oil prices in any year time frame, you get a 20% correction. So it's just something to note, but that doesn't necessarily mean it has to happen today. It's just that, you know, when you start to see some of the writing on the walls here with you know, just longer term market cycles, this seems to be like one of those kind of shake out the weak hands kind of moves where you know, if you were short, yeah, I mean, you got torched, but it's one of those things where you know, if you kind of zoom out and you look at the bigger picture, this is very typical of like a long term kind of rally. And you know, usually this is like the finishing move of a final like a final high that's usually put in, and you can kind of see that too when the volume is relative to the last peaks. You know, you had a lot of volume trade hands right at this you know, right at this point of control here, and if I pull up the S&P, it's kind of like the same situation where you know, you really only had a lot of this, you know, mega high volume when we had the all the tariff stuff. And you know, that's the last time that we had one of these, you know, weekly sell signals. And you know what, we also just kind of had it here, but we just got this, you know, just this big rip up. But again, exhaustion happens quickly when you've got a lot of this volume. And this is, I would say the vast majority of this is, you know, institutional buying, and I think a lot of it also was short covering. But when this is, you know, when this is kind of starting to look like it's pivoting a bit here, you start to see some more games. Like you start to see, you know, like high volume rejections, and then, you know, they'll turn off, they'll take the foot off the gas, and then they'll let the, you know, the bulls buy it up here, like with earnings, you know, that kind of thing. And then, you know, it's really up to them to see like how much money they want to spend on it. So one thing I think is important to note here is 1 second. Sorry. Here we go. So this is sort of like the first trend line test of you know, since we had this breakout. Typically with the megaphone pattern, it is a bearish pattern longer term. However, that doesn't mean short term you won't see anything like you won't see anything that's going to be short term bullish. So I do think that you'll probably see some sort of like ending diagonal here. Because this is, you know, again, this is the first test of this trend line for the breakout. Now, I kind of think that this is shaping up to be like a false breakout. You know, I think a week or two ago, one of my final target was around like 7,200, something like that. I know that Nasdaq's a little bit different, but we already talked about the, you know, 27,500 level. But you know, you can kind of make out their like the ABCs within it. So I kind of think you might see something like this, and then once you hit that final kind of high, then you might see, you know, like one of these things. And it, you know, again, drawing with crayon, but you know, it's that false breakout that really fools a lot of people. And what I'm really looking for is, you know, like how strong are these reversals? Like how strong are the buyers that that buying with support? And right now it's all earnings driven. And you know, I think A lot of the buyers that were like trying to pump the market, they may have gotten trapped at the top. They want to, exit their positions overnight, that kind of thing. But I think most of it too is just distribution. It's just, we've really had a huge run here. And if it ends up being this, end of a wave 3 and then into a wave 4, I think this is probably the more likely scenario where you'll get, a bit of a pullback here, then you get some consolidation and maybe another, run at the high. So there is a situation here that I think might be plausible for the bullish case, where you could have this sort of, bit of a visit towards the point of control, at least for the range here. And then you could have maybe like another, another run. But this, in my opinion, to be like the, probably like definitely the final kind of run. The only question I really have is, have we already seen a wave 3 top? Was that something like, just now, or is it going to be once it reaches like just a slightly higher high? So I guess that's a sort of the short-term projection here, is that probably for the remainder of the week, if we don't see some sort of like violent reaction or whatever tomorrow, if we, maybe we see like a, short burst in the morning, but I mean, we're starting to see some decent sell volume, and it's really only been triggered after we've reached this longer term trend line here. So to me, that just kind of spells weakness. Like we have a couple strikes here against against the continued bullish case, not necessarily the bullish case at all. Hopefully that makes sense. But short term, again, low volume. You don't have a lot of broad participation. You don't see volume increasing with the buys, and really, I think it's just getting sold into right now. So, in my opinion, it's just kind of a matter of time before it reverses back down. But the question is when. It's always when. And just from a pattern perspective, I think we probably got another little ABC up to go. But I think that the returns are pretty minimal at this point. I mean, if you look at the even from now, if you get another 1.5% out of the market, I think it's not going to have a lot of broad participation. I think that a lot of sellers have taken up positions already, and they'll most likely defend those. And you can kind of see that with some of the price action. So if I go into just the S&P in general, you can kind of see like the volume has kind of changed in a different way. I'll show you 5 minutes. So as soon you kind of see how this low volume every day, like everyone's like, why does it keep going up? Then you get the sell signal, and then you start to see these higher volume tests. And I think I flagged these on the day on the 20th, but just showing essentially that like this is sort of like sellers saying, no, you guys are going to chill out for a minute. And then you can also start to see these sort of, it kind of looks like the random kind of sell spikes. It doesn't really have the same sort of volume profile as the rest of like a quote unquote normal day. Like if you go back in time here and you kind of look at some of these, like usually you get big concentrations in the morning and at the end of the day, kind of like these these big kind of like a U shape, and then usually you'll get like buy spikes like this once you see some accumulation. And this, I kind of remember this day here. That's where the ceasefire stuff was all announced. But once you start to see the same on the other end, which is what we're seeing here, this looks like distribution to me, not reaccumulation. This to me, like buyers trying to push higher highs. That to me is buyers actually defending these levels because they're probably also selling. Like you can buy $1 billion of 5 companies to keep the market propped. Well, you can also sell 10 billion of some of the other companies that and essentially like you're trying to keep the market propped with mega caps, and then you sell into that with or like while you keep it propped for a day or two, you do a lot of distribution. So I guess it remains to be seen whether that's going to be correct or not. But I guess to kind of wrap it up and not blather on about it, I do think we'll see another little ABC up here, and could be, I mean, highly likely it's going to be tomorrow, but I wouldn't stay too long. And Yeah, it's just, when you're up in the nosebleeds like this, there's a lot more risk of a sudden, mean reversion versus like a continued sort of pump, especially when you get to these consolidation patterns. This is not a bullish pattern. Like the odds of you seeing something like this where it just continues to go up, I'd say it's on the rare side. I'd say it's probably less than 20%. Where you see like an ending diagonal pattern like that resolve to the upside. It does happen, but it's only really happened a handful of times, at least that I can remember. One of the other signals I like to check here is if you look at something like the Dow. So the Dow typically leads, and with the Dow here, I mean, I can see some sort of bull flag kind of taking shape here, but when I think about it, even if you get some sort of I think we'll get to this 50,000 again. This to me looks pretty clear. So like you don't always have to buy in the Nasdaq or buy the S&P. Those are just super inflated. I think if you wanted to do indexes, the Dow to me looks like a much better play. Like it's all the wave counts and stuff look they kind of jump off the page at me. Not saying that this is actually like going to happen like a foregone conclusion, but I think it's a higher probability setup than something like if you're looking at, well, here, let's go to the S&P. If you only get another 40 points out of it, that's not even close to the 1,200 points we'll probably get out of the Dow. Okay, so those are the indexes here. Any questions, comments, concerns before I move on to commodities and stuff? Okay. All right, so real quick, we'll just talk about the yield. The yield, I think, is a directly related function to just the price of oil. I think that, rates being held flat today, everybody knew they're going to be held flat. You can also kind of see like a cup and handle pattern that might form here. So if you kind of draw it out, even if you see a pullback, you probably see some sort of consolidation, then a breakout higher. Now that's not good, for auto loans, home loans, any type of loan, but it's reality. The price of oil is sky high, and it's very inflationary. Oil's in everything; it's in all plastics. You can already see. Personally, I've seen prices on Amazon go up for stuff that's just been sitting in my cart for a while, and I think part of it is just the cost of goods sold is increasing, in several different ways. Whether it's higher port fees or whatever, just extra tension, who knows? But I guess, I think we are coming up to some sort of, potential breakout here. What I'm really looking for is, so now that we've gone past this 4.3%, that's kind of like a, longer term sell signal for equities. It's sort of like, if you have like a, adjustable rate mortgage where, let's say adjustable rate, like home equity loan or something like that. Like you're taking out withdrawals, and then now all of a sudden the interest to service those withdrawals has increased by, let's say, 5 or 6%, and it sort of makes it, sort of a weird way to put it, but like it makes it like unaffordable to borrow it because that the interest payments are going to be really high on it. But like a payday loan, I guess that's probably a better way to put it. So anything above like the 4.3%, like investors are going to demand higher premiums because it's sort of like the core asset, which is like U.S. bonds. And once you start to see like corporate paper and stuff like demand higher returns, then that's just more money in interest payments to whoever's servicing the loans, and that's just less money or less liquidity out in the on the open markets, which is what's been propping this gigantic bubble for forever. So, anyways. Gold, I'm actually not so sure that this is going to happen here. I think with yields rising, gold metals don't typically follow yields so much. This kind of has like a kind of like an inverse relationship. So I think maybe this might be a little premature here with like this wave 1, 2. Maybe you see something sort of like this where you have a wave 2 that jumps up higher and does a retest of this 50-day moving average. I can kind kind of think this might be the case just because you're going to have some sort of pullback here with the yield. So I'm thinking, if you get some sort of pullback like this, and then move higher, I think you'll see the opposite move here with gold. So you could see here, just kind of model this out. So if the yield does that pullback and gold rises, then you'll probably see a continuation lower here. But I do think that this is kind of shaping up to be one of the last legs down. I think this is sort of like a big flag in development here. So I'm definitely a buyer at 4,100 for gold. If you look at something like silver, I'm definitely a buyer at 56 or 60 really. Just because even if we do have these sort of like longer term sell-offs, I just think it's a much better trade than to go long metals, is because inflation is coming with high oil. I think it's just general consolidation for the next push higher for metals, but this could be like a wave 4 longer term, and the same thing with gold. So you see these like kind of flag things developing. Those are typically like launch pads. So I would say overall, indexes are just looking like a very, very unattractive trade, overinflated, exceptionally high PEs. There's so many articles and stuff circling around, the internets about how, excessively inflated a lot of these asset values are, more than 1929, more than 1999. Like it's true. So, but can it go higher? Yeah, sure. Why not? I mean, to me, this is a huge asset bubble. And there's really nothing that's going to signal on top in that unless there's some sort of catastrophic thing. I mean, oil above $100 a barrel sucks. That's for sure. And equities, I don't think will survive much longer. The higher than $100 it stays, because there just really seems to be no resolution in sight. And now that we kind of flip here towards towards oil, there's in my opinion, there's gonna be some kind of a reckoning, where you're gonna start to see some of this macroecon data like CPI heating up again. You start to see inflation taking a bigger bite. Like where I live, talking to normal people, everything it's all about the price of gas right now. It's all about people not having enough money to do whatever because they live so tight. It just happens. Like the general middle America has been getting squeezed by inflation for a couple of years now. I think a lot higher inflation than you're going to read about. But a lot of these stats get revised, years later, right? When the people who caused it are no longer in charge. But anyways, not trying to be political with that. Just trying to be realistic. So I think we should probably get a little bit more upward mobility here with oil. It seems to be just on a run here. I don't really, it's overinflated, but I don't think that matters. I think it's at least at the daily level, it hasn't reached overbought yet. So I think that we could see, it's possible, you could see another like tweet storm that drives it down, sort of like that. But I think the damage has already been done. Where longer term, we're going to see something like this bite, from spring into summer. Natural gas, I don't know what natural gas is doing. It's I think part of it is just it's like that the contract rolls are kind of making this a confusing kind of trade. It's just like the carry, like the carryover from prior contract rolls, I think are just kind of depressing it a bit, but it still looks like a flag to me. Oh, sorry, I got a contract roll right there. I always have to adjust this thing. Anyways, it looks like a flag to me. Whether it plays out or not, I guess remains to be seen. But I think that gas can't really stay too much lower for longer, especially if oil is getting super expensive. I mean, all that stuff comes to the straight as well. All right, let's look at the ultimate excess stocks. So this one just continues to surprise me at how like quickly it moves, and like you see all these gaps and things like that. I mean, gaps do fill. Doesn't mean they fill today. But overall, I think we've kind of reached this sort of top level here for an extension. But with how crazy it's been, it's possible it could reach up to like 487. I think that's going to drive most of the returns, is like all the semiconductors. So if you don't want to buy anything like metals related or commodity related, because all those prices are going to go up, then I highly recommend. Well, I can't recommend anything, but I highly recommend evaluating something like the SOX trade. I think that you are seeing like a very clear kind of 5 waves, and this would be consistent with the bullish scenario we showed with the ending diagonal, where you could see maybe like a higher high, but you're starting to see some more sell volume picking up here, and with an overbought signal, it's only a matter of time before you start to see a pullback. But the real concern I have is how fast is that pullback going to be? If it's going to be really fast, you're going to get a lot of people trying to flood the exits here, and it's you can get a bit of a scary situation with that. Last thing with the semis, if you look at something like Nvidia, I don't think it's done yet. I think you probably call it the pinnacle of greed just for fun, but this does look like a like a wave 5, like everything else in the larger scheme of things. And I think this is like a finishing move here. It's, I mean, if you think about it, Nvidia's now with the price where it's at, it's worth like 18% of US GDP. That's insane. Like 18%. And if you think about it, like there's accounting questions, things like that. 18%, that's massive. Like in the 1999 .com bubble, Cisco's at 5%, and that was the maximum. Like that was the most highest valued company of, and 5% of US GDP. And look what they do now. They still make modems and stuff, but certainly not the valuation it ever had at one point, or sorry, like it never returned to that valuation. All right, so let's take a look at let's do Tesla first here. Tesla, I think, is actually going to be a good long. I think it's getting pretty close here, where the sellers are kind of running out of gas and momentum. I think anything below like the last low here would be like a stop on that, like 362. Because this level here, I don't have it drawn on the chart, but like this level here was the 0.618 pullback from peak to trough here, and you could see this this kind of move up. So again, index is probably not where you want to where you want to deploy any capital there, but individual stock plays I think would be a much better use of funds, like some of these other companies that look like they're about ready to kind of consolidate and take off. So Tesla is just one of them that kind of seems like it's due for some sort of retrace and a push higher, and then you could see some kind of consolidation and then ultimately head a little bit lower. I know a lot of people ask questions like, well, why would you buy if it's gonna head lower eventually? Well, I mean, you trade the waves and trade the trends. I mean, everything else has been crazy bullish. But anyways, so let's take a look at Bitcoin. Bitcoin, I think Bitcoin is topped. It just kind of seems to me like it's I won't go over the details, like what the patterns are called and what they all the other things that kind of come with that. But anytime you kind of see these like ascending kind of wedges or ascending channels, they're more like consolidations, and you can also see how this volume has just dropped off a cliff. And this to me is like it's kind of a red flag, where if Bitcoin kind of topples over, highly likely it's going to spread to other asset classes like equities. So even though yes, I do want to try to be even-handed with this stuff, I still think that equities in general on borrowed time. MSTR, last one, the book here. This one, I think, this one is a little weird. I think we could see something interesting, like we could see a little bit higher of a high, where this could be like an ABC here. But for this one, this one's just a little bit odd. So I think overall, like long term, you know, I'm going to try to get out of any longs or shorts, but I might take some profits on shorts here, probably tomorrow, because it seems like, you know, the sell volume is kind of drying up here. And when this does have some sort of retrace back up, that's probably where I'll target to maybe get out of longs. But try not to rush it, just because there's that potential for it to, you know, cruise a little bit higher yet. Okay, so that's pretty much it. Any questions, comments, concerns? If not, we can wrap up and go to bed earlier or whatever. All right, the clap is good. All right. Well, thanks everybody. Appreciate you watching, and we'll see what tomorrow will bring. Thanks everybody.